Now speaking, Billy Eckert, Vice President, Investor Relations. Tremor International reported its first quarter earnings ending March 31, 2023. CEO Ofer Druker and CFO Sagi Niri participated in the call, emphasizing that their statements were forward-looking and could be subject to risks and uncertainties. They provided definitions of non-IFRS items and reconciliations of IFRS to non-IFRS results. The company expects their financial performance, market opportunity, growth prospects, strategy and financial outlook to be impacted by unexpected changes in their business or macroeconomic or industry conditions. Now speaking, Ofer Druker, Chief Executive Officer. Tremor International and Amobi combined forces in Q1 of 2023 to create a horizontally integrated CTV and video-focused ad tech platform, fueled by unique and exclusive data. The company achieved over $50 million in annualized operating cost savings from an initial efficiency plan and is expecting a total of $65 million in annualized operating cost synergies related to the integration. Tremor Video's CTV and video algorithms and capabilities were moved to the Amobi DSP due to its stronger self-service capabilities, while the majority of the managed business was also moved over during this time. Q1 saw significant resources and management efforts invested to combine sales teams and processes, with advanced training given to the combined team. Advertising demand began to improve in Q1, and by Q2 the company had seen increased advertiser activity on their platform and accepted sequential quarterly and year-to-year growth in contribution ex-TAC and CTV revenue. This growth was driven by improved advertising condition, sales force enhancement, cross-selling, and increased interest in their combined platform suite. Contributions ex-TAC generated during Q1 resulted in adjusted EBITDA of $8.9 million, with the company expecting to achieve significant sequential quarterly growth in profitability and adjusted EBITDA margin expansion during Q2. The company also announced partnerships with TCL Falcon and Hisense/Vidad to access premium CTV inventory, NBA League Pass, and ACR data, respectively. Finally, they completed 2 share repurchase programs and added new actively spending first-time advertiser customers and supply partners during Q1. Now speaking, Sagi Niri, Chief Financial Officer. Tremor International reported record revenue of $66.9 million for the first quarter of 2023, compared to $71 million in Q1 2022. Adjusted EBITDA was $8.9 million, compared to $38.7 million in Q1 2022 and an adjusted EBITDA margin of 12% on a revenue basis and 13% on a contribution ex-TAC basis. The weak advertising environment during Q1 had a significant impact on the financial performance, particularly in January and February. However, since early March, advertisers have been more active on Tremor's platform, particularly in CTV, which has resulted in improved visibility and momentum. Tremor generated record programmatic revenue of $62.5 million in Q1 2023, up 6% year-over-year from $59.1 million in Q1 2022. Programmatic revenue as a percentage of total revenue increased to 87%. CTV revenue was $21.3 million, reflecting a Q1 record and 34% growth year-over-year from $15.8 million in Q1 2022. Video revenue accounted for 75% of programmatic revenue, down from 93% in Q1 2022 due to the ongoing integration of Amobi. The company used $7.9 million in net cash from operating activities during Q1 2023 after generating net cash from operating activities of $16.1 million during Q1 2022. This reduction was largely a byproduct of the weak advertising demand environment earlier in Q1. Tremor also incurred approximately $5.1 million in one-time severance and retention bonus-related costs associated with the reorganization of Amobi employees into the Tremor International base. As of March 31, the company had $89.1 million net cash, as well as $80 million undrawn on its revolving credit facility. Tremor expects challenging market conditions to weigh on advertising budget for the near future, at least through the end of H1 2023, but anticipates improved results throughout the remainder of 2023 compared to 2022 and the early part of 2023. Tremor is cautiously optimistic that the higher level of advertiser activity observed on its platform so far in Q2 will result in sequential quarterly and year-over-year growth in contribution ex-TAC and CTV revenue, as well as sequential quarterly growth in adjusted EBITDA and adjusted EBITDA margin expansion in Q2 versus Q1. For full year 2023, Tremor expects contribution ex-TAC of approximately $400 million and full year 2023 adjusted EBITDA of $140 million to $145 million. Programmatic revenue is expected to reflect approximately 90% of full year 2023 revenue. Now speaking, Ofer Druker, Chief Executive Officer. In Q1 of 2023, the company has continued to grow their CTV market share while positioning themselves for further expansion. Furthermore, early signs of advertisers expanding again have led to cautious optimism that this momentum will continue in the second half of the year. The investments made to enhance CTV capabilities and sales organization have already begun to pay off. They are taking advantage of a new cross-platform plan which is gaining traction with major broadcasters and agencies, allowing them to capitalize on conversions with enhanced scale and depreciated planning capabilities to benefit customers. As they finalize the integration of Amobee, they look forward to launching a unified brand and for Vidaa and Hisense to grow their distribution. These developments give them optimism that they are well positioned to become leaders in the new era of CTV, accelerating contribution exit growth and achieving strong profitability for the remainder of 2023. RBC Capital Markets analyst Matt Swanson inquired, "What progress has been made on integrating Amobee and what are the associated costs? What gives you the confidence that cross-selling efforts to video for Amobee customers will continue in the second half of the year?" Ofer Druker replied, "In response to the question about our integration and cross-platform capabilities, we have moved our algorithms and CTV/video capabilities from our DSP to Amobee's for a more powerful omni-channel DSP. We are now in the process of moving third-party clients from our DSP to the new one. Our cross-platform technology enables linear TV advertisers to expand their reach into streaming and CTV without duplicating payments. It also reduces deduplication and allows for incremental user acquisition on streaming and CTV. We have seen strong interest in this technology from broadcasters, brands, and agencies with successful testing. We also offer user extension management on our SSP, which is seeing rapid growth in CTV." RBC Capital Markets analyst Matt Swanson inquired, "Do you think market momentum towards end-to-end solutions makes it easier to explain your value proposition to customers?" Ofer Druker replied, "We have been building our end-to-end solution since 2019, which provides advertisers, brands, and publishers with the necessary tools to reach their desired audiences. This includes a DSP, DMP, and SSP. We believe that this horizontal integration gives us an advantage over other solutions in the market. Additionally, our planning tools allow for better spending of dollars to get the best results. And finally, we have exclusive access to ACR data through Vidaa, a leader in CTV and smart TVs, which enables us to do targeted measurement with increased accuracy. All this allows us to create an ecosystem that is gaining recognition from peers and clients alike." Needham & Company analyst Laura Martin inquired, "How do you balance the two uses of exclusive data rights from Hisense and Vidaa to maximize ad product and ad unit value, as well as create a data revenue stream?" Ofer Druker replied, "ACR data is one of the most valuable sources of information for targeting users and we are the only open web partner that has access to it. We have the unique ability to leverage this data to create exciting opportunities on our platform. Additionally, we can provide the same data for use on other platforms, but require them to be tied to our platform in some way. This will allow us to build an ecosystem that enables people to benefit from ACR data while also engaging with our platform. Our peers are doing great work with ACR data and we want to join the capabilities they have to offer." Needham & Company analyst Laura Martin inquired, "Why did you decide to buy back shares given that you have lost money and had $90 million in cash?" Ofer Druker replied, "Sagi, we have ceased purchasing of Yes. We are focusing our efforts on other areas which are better aligned to our current business objectives." Sagi Neri replied, "In response to the question, I can say that we completed our $95 million share repurchase plan in Q1. We are no longer investing in repurchasing shares and are instead focusing on becoming cash generative again in Q2. We will consider other uses for our money going forward if they provide greater value." Stifel Financial Corporation analyst Mark Kelly inquired, "Can you provide an explanation of how the programmatic segment will achieve 38% growth for the full year, considering the 6% growth in Q1 and the tougher comp in Q4 due to Amobee?" Sagi Neri replied, "Thanks for the question, Mark. Our programmatic revenue in Q1 increased 6%, which was unfortunately offset by a performance decline. We previously disclosed that 90% of our revenues will be generated through programmatic activities this year, and that remains our focus. I'm not sure what the 38% you're referring to is. Stifel Financial Corporation analyst Mark Kelly inquired, could you clarify what percentage of net revenue will be programmatic for the year? Sagi Neri replied, 90% of our 400 total ad campaigns, or 360 in total, will be programmatic. Stifel Financial Corporation analyst Mark Kelly inquired, what strategies are in place to achieve a 31% growth rate for programmatic revenues this year? Sagi Neri replied, we are confident that our guidance of $400 million of net revenue and 140 to 145 adjusted EBITDA will be achieved as our programmatic activities will generate most of the revenue. We are utilizing economy of scale to ensure that our next quarter's revenue is much higher. Stifel Financial Corporation analyst Mark Kelly inquired, can you tell us about the changes you have made to gain better visibility with advertisers and agencies? Ofer Drucker replied, the Amobi programmatic cross-sales and moving more activity in-house was a major undertaking to connect the sales teams and consolidate all processes and procedures into one platform. We now have better understanding and control of our business, which has allowed us to shift our focus from integration to growth. We anticipate meeting our previously stated market numbers. JMP Securities analyst Andrew Boone inquired, what should we expect in terms of EBITDA margins as we move through this cycle and return to a more normalized macro environment? Sagi Neri replied, in response to Andrew's question, we have an adjusted EBITDA margin of 13% for Q1. We anticipate this to increase significantly from Q2-Q4 and reach a 50% margin in Q4. Our yearly guidance suggests that by 2024 we can reach 40%. We are continually refining our cost structure and have already completed 90% of the $65 million of efficiencies and synergies with the acquisition of Amobi. JMP Securities analyst Andrew Boone inquired, how do you view cross-platform measurement and attribution in light of Google's deprecation of cookies next year? What ideas are you adopting? Ofer Drucker replied, our platform has enabled us to be prepared for the cookie-less future that Google announced. We are integrated with all leading industry identity solutions, and our full end-to-end solution allows us to bypass the need for cookies when running campaigns, minimizing the effect of this move on our business. Raymond James analyst Andrew Murrock inquired, could you please elaborate on the education process you have to undertake with linear buyers to get them comfortable with leveraging Amobi's cross-selling tool? Ofer Drucker replied, great question. There is an education process we've been conducting for months, but this isn't a new technology. All the broadcasters, companies, brands, and providers understand the need to expand their campaigns into streaming and CTV, so they are already aware of the solution. We are educating them on how to use this tool to extend into streaming and CTV, and reduce duplication of exposure to the same user. The process is shorter than expected as it's more about integration and creating mutual processes to take advantage of this tool. However, working with broadcasters, which have longer cycles of initiating and getting into new technologies, is taking a bit longer than programmatic. We are in the right place and people are looking for this solution. Lake Street Capital Markets analyst Eric Martinuzzi inquired, are the consensus Q2 contribution ex-TAC and adjusted EBITDA numbers of $92.4 million and $27.6 million, respectively, realistic expectations given the current macroeconomic conditions? Sagi Neri replied, yes, we are not providing guidance for Q2. However, analyst consensus is that we should achieve $92 million in contribution ex-TAC. We're seeing positive momentum with advertisers and clients, and we believe our performance will exceed Q1 numbers. Lake Street Capital Markets analyst Eric Martinuzzi Wired, can you please provide an update on the expected loading of 2023 compared to your historical standards? Sagi Neri replied, I'd say we remain on track with our projected numbers. Historically, the ratio between tasks has been approximately 55 to 60% and 40 to 45%, respectively. We do not plan to step away from these numbers at this time. We anticipated that Q1 may be slightly lower due to the integration and consolidation processes, mainly in sales. As we unified our offering, product, and marketing materials, we are now seeing the results of our efforts over the last 6 months. Lake Street Capital Markets analyst Eric Martinuzzi inquired, Ofer, what progress have we made on the branding effort? Are we creating a new brand or focusing on one of our existing ones? Ofer Drucker replied, we are expecting to announce our new brands by the end of the quarter. This will help us internally, as it creates a connection between all our teams, and externally, as it allows customers to better understand what we offer. Additionally, it provides financial markets with insight into our acquisitions and innovations. Lake Street Capital Markets analyst Eric Martinuzzi Inquired, will the new strategy involve creating a separate entity with a new stock ticker? Ofer Drucker replied, it is too soon to discuss the topic. Rest assured, when we have an announcement, you will be notified promptly. Ofer Drucker replied, thank you for your questions. We have seen significant growth in our CTV business over the past 1.5 years. Our strategy to provide an end-to-end solution has been validated by our peers, and we feel well positioned for the future. Our acquisitions, such as Vidaa and Amobi, have enabled us to integrate a planning platform that will drive more activity to our CTV ecosystem. This year has been challenging, but our actions have resulted in meaningful achievements in the past few months. We are very excited for the future.